record low. That's the only way to describe what's happening on Wall Street right now, and most investors are completely in the dark about it. Here's what's really going on and what you should be thinking about right now. The Financial Times just dropped a bombshell. The current Wall Street rebound is being driven by the smallest number of stocks ever recorded in market history. Ever. Seeking Alpha confirmed it. Their words, "The S&P 500 rally looks broad but isn't." That's not a minor footnote. That's a 5-alarm fire. Here's the brutal math. A handful of mega-cap names are pulling the entire index higher, while the majority of stocks underneath are going nowhere, or worse, sliding back. So when you look at your portfolio and see green, ask yourself this: is that your performance, or are you just being carried by 5 names you may not even know you own? Historically, and this is where it gets serious, when market breadth collapses to extreme lows like this, it has consistently preceded major reversals. This isn't theory, it's the pattern, every time. Right now, the advanced decline line is diverging sharply from the index. Translation: fewer and fewer stocks are participating in the upside. The engine is running, but only on one cylinder. But here's what nobody is saying about this yet. Most retail investors assume that because they own an index fund, they're diversified. They're not. Not right now. If the top 5 to 10 megacap holdings account for the overwhelming majority of index gains, and those names correct, your diversified portfolio takes the full hit. You're not hedged, you're concentrated, and you probably don't know it. First, pull up your actual top 10 holdings right now. Not the fund name, the individual stocks inside it. Know exactly where your concentration risk lives. Second, look at equal weight index exposure as an educational benchmark. The equal weight S&P 500 tells you what the average stock is actually doing. Right now, that spread is glaring. Third, study historical breadth divergence events. 1999, 2007, late 2021. Each one looked like a rally. Each one was a warning. Pattern recognition is one of the most valuable tools an investor can have. Record low breadth, mega cap concentration, a rally that looks healthy and isn't. The foundation beneath this market is shakier than the headlines are letting on, and the investors who act on that information now are the ones who won't be blindsided later. What do you think this means for your portfolio? Drop it below. This video is for educational purposes only, not financial advice. Always consult a qualified advisor.